My name is Hannah Joyce and I'm part of the technology practice at Odgers Berndtson. My clients are high-growth, venture capital-backed consumer internet and digital technology companies looking to scale and internationalise. I also work with corporates looking to attract digital talent to their leadership team and board. Welcome to my interview series focused on the technology trends in venture capital. I'm delighted to be joined today by Kirby, Director of Growth Capital at Oxford Capital Partners, an early-stage venture capital fund investing in consumer internet and digital technology. Miles, thank you for joining me today.
My pleasure, thank you.
So how did you pivot from a product background at Qualcomm into corporate venturing?
So it was actually quite a long path. I started off with an engineering degree and I really enjoyed doing that, but I always felt there was some more outside of just the product, sort of the engineering part. So I kind of moved towards product management, which I really enjoyed doing. And then from there I went and did an MBA. And when I was doing my MBA, I learned a huge amount, but also about venture capital. And I thought that, that's pretty interesting. Now it's kind of one step larger from just the engineering to product management to then expanding to kind of the much bigger picture. So I got quite excited about that. And at the time, Qualcomm had just founded a venture capital fund, so it was very early stage. And so I went to the guy who was running that and said, look, I'd love to get into venture capital. So we talked for a while and he said, well, you don't really have I like your product management background, but you don't really have the deal side. And he said, if you get more on the deal side, then I think you'd be a great fit. And around that time, I got asked to go run some business development over in a joint venture between Ford and Qualcomm. So I went across and did that, negotiated a couple of multi-million-dollar deals. 6 months later, Qualcomm and Ford kind of went their separate ways. I came back and I went back to the leader of the venture capital group and said, okay, I've negotiated those multi-billion-dollar deals. And he said, congratulations, welcome on board.
What are the main challenges and opportunities, do you think, between corporate venturing versus institutional venture capital funds?
I think there's pros and cons to both sides. And having been to both sides of the fence, I kind of have an interesting view on them both. So when I was on the corporate venture capital side, people were always worried that, we committed investors. And if there was a change of senior management, was the fund going to change? And of course, we always said, no, that's not going to be a problem. Interestingly, at a number of companies, there have been changes in senior management, Qualcomm, Intel, for example, and there's been quite a shift in the approach to venture capital. So I think that has sort of, borne out that actually that can happen, and there's some sensitivity there. I think on the corporate side, there's a lot of value add that the companies can bring to the startup. So I think that's can be quite good. On the downside, you also can end up being sort of labelled as an investee of that big company. And that can cause problems on exit where, for example, a competitor of the company that is invested in you may not want to bid on that company because they see it as a company that's very closely aligned. But then on the institutional side, of course, you don't have that part, so which is good, and you can focus on sort of ensuring that the company maximizes the value. The downside is that you don't necessarily have the same connectivity back to the corporate. And actually now, having left Qualcomm and joined an institutional fund, part of what I've spent quite a bit of time thinking about is how do you kind of get the best of both worlds.
And why are we seeing so much IP in the UK and globally that isn't commercialised?
So I think it's an interesting area, and obviously working at Qualcomm, which is a company that's really made a lot of its value, 2/3 of its value really is around IP. It's interesting looking at that, and also spent some time with Arm as well, which of course is a British example of a company that's used IP. So I think what people sometimes think that all IP should be commercialized, and I think that may be not sort of quite the right way of thinking about it. And I would use maybe an analogy of if you think about exploring a country. So if we took the US as an interesting example, and IP is really kind of staking out a position and saying, I own this area of technology. And so if you think about the US, what happened was you kind of started on the East Coast and they started to develop there, but then it got crowded there. So then they said, okay, well, let's move somewhere else. And people then started sort of exploring over different areas. If you decided to go and gather some land in Chicago, you probably were doing quite well. If you were in the middle of what is now nowhere in Nevada, you probably didn't do so well. So I think there are many different ideas, and if you like, so the analogy there is IP is analogous to sort of the ideas are analogous to kind of a land grab, if you like. And so what happens is you may be developing in a university some interesting ideas, and you may find that you found a great area in the middle of Nevada, but actually, Las Vegas is 100 miles to the north, and that's really where all the development happens. So there is some sort of natural amount of IP that just probably won't be commercialized for many reasons, and that may be sort of that there is no need for it, or there's a better technology comes along. So I think that's it's somewhat expected that not all of it gets commercialized. So I think we will see more IP being commercialized, but I wouldn't expect to see all of it.
Great. And as we continue to see the integration of software and hardware, what are the key deliverables to ensure things like Internet of Things deliver?
So I think Internet of Things is one of those very overhyped terms, and it's so very broad that it's hard to say, this is exactly what it is. So the way that I look at Internet of Things is that there's kind of a value pyramid. And if you look at the top of the value pyramid, you may be shipping gold containers, or containers full of gold. So those are very, very high value. And so it makes sense to put a tracking device, because if you lose it, that's a bad thing, right? But at the same time, if I put a track on every paperclip that I produced, then that probably doesn't make sense. So I think that Internet of Things is really about having business models that make sense. And so if there's a business case for doing things and tracking, and so for example, if you're British Oxygen and you're supplying gases to companies, and you're sending out your van every day to go and check to see whether they're low on nitrogen, let's say, that's quite wasteful. If you can then put a device on that tank to tell when it actually needs to be refilled, now you can be much more efficient. So there's a real business model there. So I think that we'll see more of that, and I think having sort of the integration of software and hardware to provide a real solution is where the value is going to be. It's not going to be sort of separately in one or the other. It's really providing that whole solution.
Brilliant. And what are your predictions for sort of the future of venture capital?
So I think it will continue to be something that's going to be critical to driving sort of innovation. I think that we will see more interaction with corporates. I think a lot of corporates now are realizing that there's a lot of disruption ahead, and that if they don't engage with startups, that there's going to be sort of trouble ahead. And so I think we'll see more of the corporates coming on board. I think we'll see a number of new models. There's some interesting things going on where there are some funds that have been set up and they work with corporates, and a corporate said, we're really interested in this space and this kind of a business. And that venture fund will then actually go and start a company directly to do what that corporate is looking for, with the idea that it can develop outside and maybe be pulled back in. I think that there will be a huge amount of new things coming. I mean, machine learning is an area that I'm really excited about, and I think that there's a great book called The Second Machine Age, talking about this is the second machine wave. The first one was around replacing some mechanical labor and factories, and now the second machine age is around replacing a lot of what we do as humans with kind of mental work, if you like. And you can start to see that with bank tellers, where they used to write in big journals, and now it's done by computers.
And you mentioned machine learning and artificial intelligence is an area that you're personally interested in. What are some of the key investment criteria for Oxford Capital Partners?
So we really have got a best of British approach, and so we are a UK investor, so we focus on companies within the UK and areas where we believe that the UK has a strong advantage. And so there are a number of different areas. One is around retail, and especially online retail, where the UK market is far ahead of many of the other markets around the world. We also look at a lot of sort of technologies around machine learning that we already talked about, and I think with sort of the acquisition of DeepMind and with Vocal IQ and SwiftKey, there's a lot of examples of some really strong strong companies coming out of the UK in this space. We're also very interested in core technologies, and so I'm looking at improvements in positioning indoor and outdoor, looking at a number of technologies around battery technology, improving data centers. So there are anywhere where the UK has got sort of a strong position, of which there are many, and then we like to invest anywhere from sort of late seed stage to Series A, investing from about $750,000 to $2 million in the first tranche. I like to support the companies, help them grow, and then continue to invest and make them successful.
Brilliant. Well, thank you so much for your time today. It's been very interesting.
My pleasure. Thank you so much for having me along.
Bye.